Hey everybody, Gary with Basecamp Trading. Let's take a look at recognizing choppy markets. One of the best ways to recognize a choppy market is by a significant pivot high and a significant pivot low. And this is the gold chart from today. And on the Renko chart, the pivots are really obvious. It's really easy to see where the pivots are. We had this significant pivot high right here, had this significant pivot low right there, and the way you know these pivots are significant is you have a high and a low and you start pivoting inside there. And you can see that it pushed up, started to pivot, and so now you know you're in compression. This happens to be fairly wide range compression, but compression nonetheless. And you can see that gold just chopped inside this channel the entire rest of the day. Gold never really broke out, never had any kind of a trend, and was really just kind of a sloppy mess. And there were no real decent trades in gold today. Now, if you're a scalper, there are definitely some scalping opportunities in gold, but nothing trended. There were just no trends in gold today. And that's a good way to recognize that. Once you start pivoting between pivots, that's how you know that you're in the chop. Let's take a look and see what happens when you find a breakout. You can see crude, same thing. Right here in crude, we had this significant pivot low right here and this significant pivot high. And you can see crude just kind of pivoted inside that pivot, and then it broke out. And I'm not big on the breakouts necessarily. I like to see it break out, make a little retrace, and then like right here we get our wick off the 18, and then off we go. But crude, once it finally broke out, that was good for about 80 ticks to the upside. In the meantime, you're just chopping away inside here. This had a slight upward bias to it, but you're still just kind of chopping. If you're trying to trading this, you're getting chopped up in this mess. And then, like I said, you get the breakout, get the pullback, and then you start trending to the upside. And again, that breakout was good for a little more than 80 ticks to the upside. And then you do basically the same thing on a time chart. This is our 5-minute chart in the ES. And you can see that when we put this on here, we were in the afternoon session in the ES. And when we initially put this on, we were right in here. And you can see we had this pivot high. This was actually the high of the day. And then you can see you had this reversal doji right here. So this was a good pivot. And the way that you can kind of tell a significant pivot high and a significant pivot low, this is obviously a significant pivot low also. Like that was the low of the day. And you can put your channel there, but you really had something that was in a little tighter range. Again, you can see you had a significant pivot low right there. This reversal doji triggered back to the upside, and then you were just pivoting. And at the time we drew the channel on, we were right in here somewhere. So we could see that we'd had a high, made a pretty significant pullback, put in the reversal doji, moved back up, and then we were just pivoting. Had a little false breakout right here. Again, that's why I'm not real big on taking the initial breakout. I want to see a breakout, then a pullback, set up the flag, and trigger. This one broke out, pulled back, set up the flag, and you notice never triggered. So we didn't get caught in the false breakout right here. And then we just kind of chopped a little more and worked our way to the upside. And then we did break out to the upside. We broke out, made the pullback, set up the bull flag, triggered, and then off we went. We had a couple upside targets, 28.27 3/4 and 28.34 1/2. I think the high ended up being around 28.35 or so. So once we broke out of compression, this compression breakout took place actually at the previous high of the day. The high of the day at that point had been 28.1775, and then again we had our upside target up there at 28.2775. So that was 10 full ES points, or $500 per contract. And then we ended up breaking a little beyond that, actually. Like I said, the high ended up being 28.35. 28.34.5 was our next target. At that point in time, we had hit significantly overvalued on our 30-minute chart in the ES, and so we knew that was a good place to take profits. You could see right in here is where we had that channel breakout. We broke out, and then you can see 2 bars in a row. We hit significantly overvalued both times at target areas, so we know that's a good place to take profits, or at the very least, tighten up our stops. But again, just look for the pivots, and when you start pivoting between pivots on your chart like that, that's how you know you're in compression, and you just want to sit on your hands. We came in at 11 o'clock Central Time for the afternoon session, and you can see we just really didn't do a whole lot for most of the afternoon. I mean, we just chopped back and forth, chopped back and forth, chopped back and forth. No real decent setups. I mean, some short scalping setups. I mean, we had to push down. You set up some bear flags, that you could have scalped some points off of, and some bull flags back the other way that you could scalp some points off. But we didn't really break out and start running until we got out of this channel. And then once we got out of this channel, we got into a trend and were able to collect some really nice profits, stress-free, without having to get in and out, in and out, in and out, in and out of the market. We just jump in, and we were off to the races. So hopefully that helps a little with recognizing compression and a couple different ways you can trade it.